Traders from around the world, what's going on? It's your boy Ricky Cadden back again with another free Wednesday stock review from Real Life Trading Australia. Guys, we are less than 1 week away for the free open house. If you have not yet signed up, make sure you hop over to reallifetrading.com.au. I'll leave a link in the description below. Click on the free week tab and get yourself signed up to the open house. From the 22nd through to the 2nd of April, you will be able to experience our swing trading floor here in Australia, Monday, Wednesdays and Fridays from 7 to 8 p.m. Australian Eastern Standard Time. So make sure you guys do sign up to that. It is completely free. You can watch all my live personal trades that I do take, and I will analyze all the stocks and go through a whole bunch of strategies for you guys as well. It's a huge event. Make sure you do get involved. The seats are quite limited, so be there or be a triangle. But let's talk about the broader markets, guys. The SPY. Now, the SPY, we did get a white candle gapping up just last night, which is a retest gap, and you can see that we have had a fairly decent bullish run out of this descending trend line that we did have. I did mention in my last review that I am looking for a fairly strong close above here, which we did finally get. However, now I do think we're going to retest most likely the shorter term moving averages, the 10 EMA or possibly even the 20 EMA before we start to trade on bullish. But the SPY, small little pullback right now, and look to buy the dip. Here's the E-minis. You can see we are getting a little bit of price rejection up at this level. No surprise here, guys. You can see this particular level right here has been a level of rejection in the past before. So the fact that we are pulling back, if you take a look at the 15-minute, we pretty much have been creating lower highs all day, all through the night as well. So for the short term, guys, I'd just be a little bit more neutral at this point, but look to buy the dip. Next buying location would be possibly the 10 or the 20 EMA, which is around the 3900 level on the E-minis. Here's PLTR. Now, PLTR is a stock that we are in. So we did try to catch this one on a pullback. We did get triggered in last night. Currently waiting for this one to bounce. Got some phenomenal volume starting to pop in. Looks fantastic. Back in the green zone. And this particular level, guys, I mean, if you take a look at how far we've pulled back on PLTR, you can see that from the all-time highs, we're still about a 40% discount from the all-time highs, and we did have a phenomenal 50% pullback. So the fact that we are buying down here, I mean, it is a low. Look to mitigate your risk, but this is Mr. Squiggles right here, this blue line that I did draw, and we are currently at this particular level. So I do expect us to possibly bounce here. A little bit of price rejection at the 50 EMA, but long term, I think we are most likely going to bounce as we are above the 100 simple. So everything looks great on PLTR. Here's Square. Now Square is actually showing some very nice sideways action. Now, for all the real life traders, you guys know that you can still make money in a sideways market. In fact, we even have an indicator that will help you, a naked put indicator, which you can look to sell puts. And today it is saying that we can sell puts on Square based on this dollar sign, saying to sell put for about roughly 3 months at around 207, the 207 strike, or say 205 strike. So it would looks fairly decent for a nice little put strategy if you are one to sell puts. I'll be definitely looking at this one in the trading room tonight. But Square right now still in a bullish trend, consolidating sideways as we speak. I do expect this one to go sideways for a little bit longer, but eventually she's going to break out and go to 300 on Square. Here's the ASX 200. Now, ASX 200 market is still open, but we are currently pulling back just that little bit. Still struggling here, guys. You can see we've been struggling to actually have a strong close above this range for quite some time. If you take a look at the weekly chart, the weekly chart is, yeah, from here, guys, you can really start to see these long upper shadows that we are getting. So a lot of long upper shadows is a lot of indecision, a lot of selling pressure as we speak on the ASX 200. But if we can get a strong close above this level, I think then from then on she'll start to be a little bit more bullish. The shorter term moving averages, we are still above the 10. We are still above the 10, the 20, and the 50, so everything looks great there. Let's take a look at SZL. Now, SZL, if you take a look on the longer term moving averages, we are back down at the 100 simple moving average. We got some phenomenal volume the last 3 days. Two or 3 days ago, you can see that we did also throw in a nice little hammer candle right off the 100 simple. So this is a nice little dip buying location. We've already had a pullback of roughly 35%. You guys know I love that 30% number. And we've been consolidating for almost a year now. So SZL, it is another buy now, pay later stock. Not saying it's going to be the next APT, but however, great company. Look to buy the dip. It is on a dip right now. If you are, if you were an investor back here and you basically held, you would be at a break even right now. But be the smart investor and look to buy on the lows rather than trying to take it on the breakout. So SZL right now, look to buy the dip. Here's Avita. Here's Avita Medical, ticker symbol AVH. Now, has currently been in a downtrend for quite some time. We did back in July have a reverse stock split of 1 to 20, which isn't too fantastic, but we have been rejecting the 200 simple moving average on the daily chart. Now, one thing to note, guys, on Avita is we are currently in this particular range. We are trying to build a support level right now at this particular level. Now, the reason that would be is because if you take a look at the weekly chart, we're coming back down to the 200 simple moving average on a weekly chart. So any particular system that you're trading, whether it's a weekly system or a longer term system, this would be roughly where you would either be looking at buying or maybe potentially holding, just because we are at a very, very low level, and there is some volume starting to come in the last 3 weeks. So hopefully we can create somewhat of a inverted head and shoulders pattern or a triple bottom, and then slowly look to bounce on Avita. Here's crude oil. Now, crude oil on the weekly chart, you can see we are still at this resistance level. On the daily chart, however, you can see that we are currently retesting this level as a support. Now, we haven't yet bounced. The volume actually did start to drop off the last 3 days. So this particular bouncing location, I don't think is going to happen straight away. So at this point, I think we're most likely just going to consolidate sideways. And for the most part, guys, I'm fairly neutral. I mean, we've had a fairly decent push higher on crude basically the last month and a half. We've already come up about 30% on crude. So massive level, and on the long terms, guys, you can see that this is a very long term particular level based on previous selling locations back in 2019 and 2020. So the fact that we're consolidating sideways makes lots and lots of sense. Here's gold. Now, gold is slowly but surely creating some higher lows and some higher highs, which is good to see. Volume is not super fantastic. If you take a look at the weekly chart, you can see that we are currently roughly about the 100 simple moving average and slowly starting to bounce. Makes a lot of sense. This 1687 level is a nice little buying location. We've had a fairly decent pullback on gold, but right now, guys, I just think that most likely we're going to consolidate for a little bit longer. Probably create some higher lows and then slowly start to break out before we do go higher. Here's the Aussie dollar. Now, the Aussie dollar on the daily chart, you can see we are trending completely sideways. We really struggle to get above 80 cents, and right now I just think we're going to consolidate sideways for a few months, guys. I think we've had a fairly decent bullish run. Most likely we're going to stick between 75 and 80 cents for the next probably about the next 3 to 4 months on Aussie dollar at least. So if you are looking at trading the Aussie dollar, or if you are a forex trader, look to buy low, sell high. 76.50. This is going to be the level that I'll be looking at personally for a dip buying opportunity. But for now, guys, we're stuck in the middle of a range, so I'll just look to stay away from this one. All right, guys. Don't forget to sign up to the free week. Remember, Monday, Wednesday, Friday, 7 till 8 p.m. Join us. be there or be a triangle. It's completely free. Cannot wait to see you guys there. And I'll be back on Friday with another free real life stock review just for you. And until then, love life, live life, and trade it. You guys rock. Bye.